Hey traders, Roybert here. I wanted to discuss the different types of trading that you can be doing simultaneously, because it seems like when I watch other videos about trading, it seems like everybody's got one thing they do: options only, or or forex, or day trading only, or swing trading only, or long-term investments, or you know what? You can do as many as you want. You can do whatever kind of trading you want. I do three. I do three different kinds, and the first one I didn't have any control over, and that's managed, and we don't do anything with it. It doesn't grow that much, and it shouldn't be where it shouldn't be where it is after 20 years. That's the problem. I make my little income in addition to my wife, who makes the real income, from watching dogs here at the house. And that's worth about $24,000 a year. And what I wanted to do was substitute with trading. But trading is not something you just read a book or you take a lesson and then you're a trader. It's not that easy. It takes a couple of years to get up to speed, and I'm a year into it, and I'm okay. I don't make money, but I don't lose a lot of money, so I'm still doing okay as a trader. But that's not where I've done well. Where I've done well is in swings and in longer trades, which I set up as the other account that I do. That's not my managed account. The other account is what I started while I was still learning on the simulator. For months I was on the simulator, and during that time, the money that I did have that I could be investing, I was investing. I was investing it into longer trades. And what happened was it started to make money, so I had opened a Roth account for the bigger money, and I moved it over. I moved the whole thing over there. I had to sell it and rebuy it on the inside, and since then it made a lot of money. That one stock I was in did really well, and then I took that money, I flipped it, and I invested in others, and they're doing really well. So what I do is I wait for a growth stock to make a big progress. When its valuation becomes more than I think it can sustain, and I'm not necessarily right. I just think that I've made a lot of money, and is this going to hold up, or should I get out? And I've gotten out in the past and just reinvested in something else, and that works. So you don't have to stick with one stock forever. If it makes a lot of money, get out and do something else. Find another growth stock that's starting out small and getting bigger. And that's how I did the real money making. And that's doing really well, and I'm very happy with where that is, and it has nothing to do with the investments, and it actually has nothing to do with the day trading, which is trading I do that, like, I'm just learning how to do that. One day it will replace the dogs, and I will have an income that costs me nothing to do, but generates money, and that money will then go into the Roth. And when it makes more money, I won't pay taxes on it because it's in the Roth. So when something does well outside the Roth, if I make a few $100,000, whatever, I'm going to move it. I'm not going to keep it in my cash account, and I'm probably not going to spend it because unless an expense comes up, we don't need it. The dog money kind of covers everything we would use a credit card for. What I'd like to do is retake my property away from the dogs and start having an income that's based on normal everyday life. Something that I can do that is not strenuous, that doesn't cost anything. I don't have to drive anywhere. My overhead is my two computers. If one should go bad, I get another used computer for a couple of $100. It's a very equitable situation if I can get trading to start to make money. But now here's the key. Because I do small trades, I can run my cash account with like I have like $1,800 in it right now. I don't need that much to practice. I'm still practicing after a year. I'm not good. I'm not good at it. I have days where I make good choices and I do the right thing, and then I have days where I don't. And um, I just need to get over the hump of the good days outweighing the bad days, or at least the profits outweighing the loss. And um, when that happens, I will start to be able to pare down my other business and increase how much I put into my trades. I keep them small. I keep them at $300. I try to take a 10% on each trade. That's like $30. If I can do that 3 times a day, if I'm very lucky, it hasn't even happened yet. But if I can do that 3 times a day, that uses $900, and I have 18, so that's not even half. So that gives me some flexibility, but I still haven't made it work. And a lot of it is me breaking my own rules and losing money that I don't need to lose, making bad choices. So, to that end, I am still becoming a trader, and it's more of a hobby than it is a way of making money. It's just something that is going to take some time. So, when I talk about these growth stocks, that's a whole other animal. I don't care about growth stocks in day trading. I care about what's volatile that day. Those stocks aren't. They might even be companies you don't know. You don't know anything about it, and you don't care as long as it's moving and you can afford it. And that's all you're doing is you're just trying to catch a ride for a little bit and make profit on the way as you hop on the thing, take a ride, get off. And it doesn't matter what they do. Doesn't matter. That's not what day trading is about. The other thing about the investments, not the investments, the long-term stuff, the swing trading investments, you do know more about the company, and you do want to know more about the company. You want to know more about their fundamentals, and you want to know where they're headed, and you want to know where they've been, and how and at what rate they're increasing. And usually, you don't even know about them until they start showing some progress. So that's when you start investigating. And if they show progress and it looks consistent and it goes up and it stays up, that's the thing. If you're looking at a $2 stock and it's been $2 for 10 years and suddenly it's $3 and $4, that stock is ready to do its thing. It might take months, but it's going to start doing its thing. If it goes up 100% and stays there, then it's growing. It's on its way. Occasionally you will see something that has a big boost and falls right back down. And a lot of that can be just related to pump and dump. Pump and dump is a very annoying thing, and I will demonstrate several of them so that you can recognize the pattern. They often start in pre-market, so you're not even involved in making any money on them. They happen early in the morning. You weren't there. You didn't, because nobody knows. Some investment company, hedge fund, puts a couple of $1 million onto a penny stock at 5 o'clock in the morning, and it does this, and all the other companies get on, make a bunch of money, and then they all jump out. And the rest of the day, the suckers like us are like, this was great, look at that. It went down a little before opening, but it'll go back up. And it doesn't. It might have a little bit of a spike return that you might be able to catch a few bucks on, but pump and dumps are not moving because of sentiment. They're moving because somebody put a whole shit ton of money on it, and it caught interest, and the interest caught suckers, and the suckers bought into it, and the smart guys who started it got out after it peaked, and they're pulling their money out, made it start to fall, and us suckers thought, well, it's only fallen a little, it's going to go back up. Beware of pump and dumps, and they have signatures. You can tell what to stay away from. You don't have to even think about it. You see the thing, and you say to yourself, "There's better things to mess with today than this." I just wanted to do one that was an overview of why you don't have to just do one thing or the other. If I was just day trading, I'd be unhappy. I'd be losing money. I'd be throwing money at it. I'd be losing money pretty frequently. Although I haven't lost a lot over the whole year. It's like I've lost probably what amounts to, like, if I had a job and I had to pay for parking downtown, something like that. Parking garage, a daily loss of $12 or something like that. I may be at that. I'm probably in that range, but that's okay. That's manageable. I'm not putting our life savings on the line. I'm taking some extra cash and putting it in that account and seeing if I can do something with it, and practicing and trying to get better at doing something with it. And if I should screw up and lose some money, then eventually, yeah, I might have to add some more money if I can't build it back up on its own. Until I'm good. That time will come, though. If I am not losing my shirt, then the time will come where I am better. And that's where I'm hoping we can get the newcomers to get to this point where you're okay. You just need to keep doing it. It's like fishing. You know what? Nobody's going to say, not like that, like this. You just keep doing it.